Hello and welcome to Portfolio Matters. In today's podcast, we will be talking about the market for rare earth elements and neodymium in particular. And this is very on topic because, as you may have seen in today's FT, the Chinese are again talking about restricting rare earth exports to the West. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Okay.
Thank you, Richard. So this is the second podcast we have done on rare earth elements, and the first one covered what they were and what their uses were, and I urge you to watch that if you have not already done so. There will be a link in the description. Now, the conclusion of this long presentation will be that currently China controls 80% of global supply and absolutely can control prices. But in the medium term, a wall of supply is coming into an inelastic market and the price is likely to fall. Okay, so the history of the market for rare earths is really a history of the Chinese state attempting to leverage its dominant position in the market. And it took a strategic decision early on to try and dominate this market. So here we have a quote from Jiang Zemin. Improve the development and application of rare earth and change the resource advantage into economic superiority. So if we look at a history of the Chinese domination of rare earth elements, they found the largest mine in the world in 1927, and then again in the 60s they found further rich resources. As we've seen in 1999, they took this strategic decision to try and dominate the market, which involved attempting to buy other resources around the world. So a state-owned enterprise, the oil company, attempted to buy the Mountain Pass mine in California in 2005, but was blocked by the government. In 2007, it started leveraging its position. So it cut off supplies of rare earths to one of the big US manufacturers of catalysts, W.R. Grace. And that caused W.R. Grace to actually move its subsidiaries producing this stuff to China. In 2009, it attempted to buy 51% of Lynas Corp, which is the Australian company which is the only producer of finished rare earths outside China, but was blocked by the Australian government. And then in 2010, it revealed its hand to the world by cutting exports to the rest of the world and triggering an enormous price rally, as we covered in our last podcast. But in 2014, it was taken to the WTI by the other countries of the world, and it was forced to back down. But since then, the rest of the world has been aware that China is attempting to corner this market, and as we will see, there are now lots of strategic investments in rare earth supplies outside China. So in 2019, it doubled import quotas. So it increased import quotas by 25%. So what currently China not only produces 60% of the rare earths in the world, but it dominates the processing of them. And so a lot of the mines around the world, such as Mountain Pass in California, have to send their ore, their concentrates, to China for processing. So here you see the history of production of rare earths. And as you can see, actually, until the mid-80s, the rest of the world dominated the market. But since then, China has taken over. Okay, so, whoops, sorry. One thing we got wrong in the last podcast was that we stated that China dominated the market for rare earths because of its patents, and that's not actually true. It actually dominates the market for rare earths, largely because of its low cost of production, but also because it made these targeted investments in neodymium iron boron magnets. So in 1983, neodymium iron boron magnets were invented by both General Electric and Hitachi. And they then merged their operations to form a business called MagnaQuench. And in 1995, two Chinese companies acquired MagnaQuench with the approval of the US government. Now, when it approved, the Clinton administration insisted that the Chinese retain all production in the US for 5 years. But at the end of those 5 years, essentially the Chinese closed down all US production and moved the factories to China. So that gave them a dominant position in neodymium iron boron magnets, with only the Japanese having a small production themselves. Everything else now comes from China, including the magnets that have found their way onto the American stealth fighters. So as you can see, China now dominates the supply chain. It mines 70% of the rare earths and then processes 85% of oxides, 90% of metals, 90% of alloys, and 90% of magnets. And this is the raw production. So here it says 62%, but 80 to 90% of finished products come from China. If we look back to 2011, when the Chinese decided to restrict exports of rare earth elements, you can see that caused an absolutely enormous spike in the price. So the chart here shows the price of lanthanum, cerium, neodymium, and praseodymium and yttrium. And you can see neodymium went through the roof. And these, on the right, this table shows the exports from China and how they progressively cut down the volume of the exports to squeeze the market. Now, are they going to do it again? And this really is on topic because this is today's FT. So the report in the FT today was talking about how the Chinese are concerned about rare earth element usage in the US defense industry and maybe trying to target that industry by restricting exports. Richard?
Okay, these are the key points that were in that article. So as you've already said, China controls about 80% of global supply. They are proposing some more controls on the production and export of 17 rare earths. As you referred to, the high-tech jet fighters require 417 kilograms of rare earth materials each, apparently, which is an extraordinary amount, isn't it?
Yeah.
In recent months, the Pentagon has signed contracts with domestic and Australian miners to boost onshore refining capacity and reduce reliance on China. And interestingly, China's demand for rare earths has exceeded their own supply for 5 years, which has prompted a surge of imports from miners in the US and Myanmar, which we know is currently under the control of the military after a coup there. and suggests that there is actually, to my mind, probably a growing shortage of rare earths. While China's dominance in rare earth mining is under threat, it controls about 4/5 of the refining capacity. The Chinese have a high tolerance for pollution. And I think a little bit later on, Keith, you talk about the pollutive effects of refining, don't you?
Yes.
So we've been exporting our pollution. We have been exporting our pollution to China. So that's the summary of the FT article, Keith.
Great, thank you, Richard. Okay, so let's look at supply and demand for rare earths. First of all, demand. Okay, so as we had covered in the previous podcast, a wind turbine, modern wind turbine, requires a lot of neodymium. And wind turbines are getting bigger. And the number of wind turbines installed every year is growing. And a quick calculation shows that actually the wind turbine usage, I was concerned, frankly, that when you talk about wind turbines, each using 1.2 tons, then, and the fact there's only about 20,000 tons of neodymium used per annum, I was concerned that those numbers don't add up, but actually they do. The massive forecast offshore and onshore wind growth in the next few years, that is going to require a lot of neodymium. And as the wind turbines get bigger, each one requires even more. So that all looks very bullish for neodymium. And as you can see, various specialist reporting companies are expecting a supply gap in the coming years. And the market for neodymium is currently red hot, and this is not updated for today's news. So if we look at the forecasts, and again, these are from last year, so they will not include recent spikes, but we'll see that the price of neodymium, praseodymium are expected to double over the next 5 years before settling back down as supply comes online. Okay, so if we now start looking at supply, the first thing to say is this is a tiny market. I've calculated that about 33,000 tons of neodymium, raw neodymium, the metal, was produced in 2019. And that compares to 20 million tons of copper. So it is less, it's like 0.2% of the copper market in volume terms. But when we look at the abundance of neodymium in the earth, it's about 2/3 as abundant as copper. So if we produce 20 million tons of copper, presumably, if we put as much effort into finding neodymium, we could quite easily find about 12 million tons a year. As it is, we only produce 33,000 tons. Now, why has all the processing moved to China? In part, it is because they have made this strategic decision to dominate the market. But also, it's because processing these rare earths is complex and nasty. It produces lots of toxic pollutants. And we in the West have become increasingly intolerant of pollution. So, if we look at the history of the Mountain Pass mine in California, it has been in operation since the 30s. But in the 2000s, it was investigated because essentially it wasn't terribly profitable and it was being neglected, and they were trying to do things on the cheap. And so they had this waste pipeline which was leaking, and spilling 600,000 gallons of wastewater containing radioactive elements into the desert. The company will fine 1.4 million. It was then reopened in 2008, but the bottom line is that it just wasn't profitable enough. It was heavily indebted and it was competing with cheap exports from China, and it was unprofitable. It went bankrupt. It's now reopened with some help from the US government. So at the bottom right here, when we talk about the causes of its collapse, in 2011, when the price of lanthanum spiked, a 1-ton bag of the powder cost about $100,000. A few years later, that same bag cost about $8,000, and Mountain Pass mine simply was unprofitable. Now, the other main producer years ago in the mid-80s used to be Poulenc in France. And in the mid-80s, they produced 8,000 to 10,000 tons of rare earths, and that was about 50% of world supply. But as we saw with Mountain Pass, the purification process required separating out all these various heavy metals, some of which are radioactive. So it separated the uranium, which was sold to the state. It separated the thorium, which was stored on site because it didn't have any buyers. But the remaining heavy metals were essentially pumped out to sea at high tide as a pollution-rich sludge. Now, in 1985, various environmentalists started looking into the plant, and they took some samples from the beach, and that showed that rather than pumping this heavy metal sludge out to sea at high tide, they were pumping it out at all tides, and they weren't correctly separating out the thorium, and parts of the beach had radioactivities 100 times higher than normal, and that had got into the seafood, the mussel and the oyster beds, all of which made Poulenc incredibly unpopular. So Poulenc then closed down the plant for the early stage processing of rare earth elements, and first of all outsourced that to Norway, and then outsourced that to China because it was cheaper, and then progressively they outsourced the secondary processing as well to China. And this is from the Linus Corporation website, and they are the only company outside China which currently process the ore into oxides, so purify it. And it just shows that it is a big, complex industrial process where there are a lot of pollutants which if you're going to do this environmentally responsibly, you need to treat those carefully to get out all the pollutants. For example, the flue gases, they need to be treated. The filtration, solvent extraction, all those need to be very carefully handled to stop radioactive elements such as thorium entering the environment. And Linus have recently had to get a new license in Malaysia for their treatment of thorium. Now, in China, they just don't bother. This is the Baotao toxic lake, possibly the worst place in the world. And if you Google this, you'll find a load of reports and lots of pictures. It's big, and basically they just pump all this stuff out into the lake. And that on the far side of the lake, that is a city. This is not far from human habitation. So one of the reasons that everything moves to China is just because, frankly, they don't care very much about environmental standards, and that gives them a huge cost advantage. Now, the other thing to say when we go into the economics of rare earth production and supply is that you can't get just neodymium from your mine, what you get is a whole mix of rare earths and other heavy metals. And this, frankly, is a really terrible chart from the US Geological Survey. And if you see bottom left, pie chart C is the rare earth element mix that comes out of the Mount Weld mine in Australia that is owned by Lynas Corp. And I believe the segment on the northwest is neodymium, but it's missing from the table of contents. As you'll see, in order to get your neodymium, you also get mainly cerium, which is used in glass polishing, and lanthanum. And the economics of your mine will also be dependent on the prices of these other rare earth elements. So here you see that the stuff you want, neodymium and praseodymium, is only about 30% of rare earth production. And there are a lot of companies now moving into rare earth supply. So if you look on the Australian Stock Exchange, 34 companies claim to be exploring for rare earths. In the UK, there are 4. Polymetal, which is the big Russian miner, has a stake in a rare earth project. Pensana have a mine in Angola and a processing plant in Hull, or sorry, a proposed processing plant in Hull. Mkango Resources have a project in Malawi, and Rainbow Rare Earths have a project in Burundi and in South Africa. So medium term, there are a lot of companies looking for this. And also, we talked earlier about how China dominates the market for processing. Well, that has been determined to be a key strategic problem in supply from the West. And there are 6 separation plants currently being planned or in the early stages of development. 2 of which have been funded by the US State Department. And this chart purports to show where all these new mines and sources are coming from. Now, Mountain Pass in California is in production. Mount Weld is in production. There's this mine in Russia, which is in production. There are certainly lots of mines in China, which are in production. I know that this one here, I think in Burundi, which is run by Rainbow Rare Earths, produces very little indeed. But you'll see there are a lot of projects starting up. And as we covered earlier, there's no shortage of rare earths. It's just we haven't bothered looking for them. And on this table from the US Geological Survey, you'll see that in 2010, China was absolutely dominant in its production of rare earths. But over the last 10 years, lots of other countries have begun to become involved. And if you look at the reserves, there's absolutely no shortage of this stuff. Now, when we talk about the price of rare earths, I think the key takeaway is that the market for rare earths is inelastic. It shows inelastic price demand curve. So rare earths are generally a small portion of the cost of a product, such as a wind turbine. The cost of the neodymium in a 2 megawatt wind turbine is something like 20 grand sterling, and the cost of that wind turbine will be a couple of million. So any change in the price of neodymium really doesn't make much difference to the cost of the wind turbine. So if you halve the price of neodymium, it doesn't make you want to build more wind turbines, but you do need your neodymium. So if the price doubles, you're still going to buy it. Okay, so if we go and look at the clock for rare earth elements, I would say we are heading towards 9 o'clock, 10 o'clock-ish, well, somewhere between 8 and 10 o'clock. So there's a lot of investment coming. So the capital cycle has started.
I'm not quite sure I agree with that, Keith. I mean,
sure.
So my thought on this is that to move from having an identified resource to being able to produce the raw material ready for final refinement is a huge task.
Yes.
And it's all very well setting up one of these businesses on the ASX, for example, that says we're exploring for rare earths.
Yeah.
But actually, you wouldn't want to invest in one of those, I suspect. And they will probably never, ever get to production because the cost of doing it, the environmental problems of doing it are far too great for it to be economically viable. So my view is that leaves the incumbent producers, the incumbent miners, are the only companies that will benefit if there is an increase in the price. Now, one of the issues is that the West either subsidizes its production or its producers go bust again and all production comes from China. But we've already discussed, or you've very eloquently explained, that one of the huge economic advantages the Chinese have is the environmental impact. They don't care about the environmental impact. But all the West has to do is say, well, you're going to pay for that, but since you don't want to pay for it yourselves in China, you'll pay for it in an import tariff. And
absolutely.
And if Western governments set import tariffs on rare earth elements to reflect the environmental cost that China is not incurring to level the playing field, that then makes these rare earth miners that exist viable. It also means that the huge price spike won't occur, but there will be a price increase, and the whole thing will equilibrate with, I think, incumbent miners being long-term profitable. Whether they be profits or not, I don't know. All these tiny explorers going nowhere, and the market being equilibrated throughout the world. And of course, then there's no incentive for China to screw their environment with this processing. So presumably they would then go to an environmentally clean production, which then would enable the tariffs to come off. So I think that's probably the way it will actually pan out. So if you look at that, sorry, getting back to my original point though, if you look at that, I'm not quite sure where that puts us in this mining clock. But I'm not even sure if it's directly applicable because of these factors that are sort of at work and the moving parts.
Well, thank you, Richard. I think the difference is you're an optimist and I'm the cynic. And I think there's a hell of a lot of investor capital that's currently going into the search and for rare earths and the production of it. And if you look at, for example, Lynas are investing in a processing plant nearer to their mine. Everyone is increasing production. You know, the Pensana have signed an agreement for processing. I think there's a wall of supply coming. And I completely agree with you in the short term that basically Lynas and China have complete control of this market. So in the next 2 or 3 years, who knows what the price will do. But if you're thinking of investing in a rare earth explorer, I would be very aware that in a few years' time, like when your mine comes onto production, everyone else's mine is coming into production at the same time.
What I think, Keith, is that the rare earth explorers won't get funded to get anywhere. I simply think there will be no funding for them, and so they are probably fly-by-night companies that are being set up to take advantage of the current situation. I think it's really difficult to value a rare earth miner because we don't know what's going to happen to the cash flows in future. Because so much uncertainty surrounding it. So if you want to invest in rare earths, you should invest in a current producer. That's my view.
Sure. But I would say, Richard, that when you say they're not going to get funding, the price of all these, the share prices of all these companies has absolutely shot through the roof. And I think they will get funding because investors are very enthusiastic about rare earths, and ultimately the price is the only signal. If these companies are all doing very well, they'll get funded.
They'll get funding for a while, but when they need $1 billion, whatever, to actually start building their mine, they won't get funding. And nobody will buy them up unless it's a resource they happen to economically need. So they have enough money for their exploration, and then they'll go bust.
That may be true, but they'll only not get funded if the price of neodymium has collapsed to uneconomic levels.
What I think is really interesting is your analysis of the total world demand and the fact that, well, 33,000 tons is what we need, mate. And, so how big an industry, at some point, reality has to sink in, doesn't it?
Well, that's right.
In the bubble.
Yeah. So, in summary, Rich and I are in slight disagreement on this.
Only mildly, I would say.
Basically, this stuff is really dirty, and currently China have a big advantage in that they don't care about the pollution. So that's why they dominate this market, and they have 60% of ore production and 80% to 90% of finished product production. And going forward, the key point that of disagreement, I suppose, between Richard and I is how will the West be willing to pay for the environmental cost of producing this ethically, and how will they do it? Richard thinks that they will be willing, and I'm skeptical.
Well, to your point, Keith, an increase in the price of neodymium of 100% doesn't stop you building a wind turbine. Doesn't really even make you look for a substitute. So I think that, to me, it's a bit of a no-brainer that the US government is shortly going to turn around to the Chinese and say, we're sticking 100% tariff on your rare earths because of the environmental damage you're doing and the fact that you're undercutting our businesses. This is not acceptable. I wouldn't be in the least bit surprised if that happens within the next 12 months.
Possibly, but I think that these markets are fungible. So if, for example, the Malaysians or the Australians decide not to put any tariffs and they import cheap rare earths from China, produce magnets, and then re-export them to America, you can get around it. Sorry to be cynical.
It is true, yeah.
So the bottom line is, I think there's a wall of supply coming, and in the next couple of years, before that supply comes online, then absolutely China can dominate this market and cause the price to spike. But medium term, I think the price collapses. Beware. Richard?
Well, my views, Keith. Fundamentally, I agree with you. I think it's an issue of timing, and I actually don't think there will be a wall of supply coming, because I don't think these new miners, these explorers, will get funded through to production.
But that means we are both agreed on the fact, don't invest in some of these small rare earth miners.
Yeah.
But our reasoning may be different. Unless
it's a producing miner and you have a year or two as your investment horizon, and you're aware that there is a limit to how profitable these companies can be.
Great. Okay, well.
So I guess thank you very much, Keith, for a very well researched and informative presentation. It was really interesting.
Good. Thank you, Richard. I hope you all enjoyed that. So I hope you'll press like and subscribe to our channel. And all that remains to say is goodbye from Richard Wheater.
And goodbye from Keith Jordan.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only. and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.